Hello, traders. Hello. Hello, guys. Can you hear me? Okay. Okay, guys. How are you all? Hello, traders. Welcome to the live webinar. Again, I'm your host. My name is MD Jihad Hussain, and thank you very much for joining me today. Okay, guys. Okay, it's clear. Let's start it, guys. In our previous webinars, we talk about protecting our trading capital. We learned about stop loss, take profit, risk, and trade management. But today, we are going to talk about something different. You can know all the rules in trading, all the things is pre-planned, all the things seems good, but there is a possibility that you will still break them. You will still break the rules. What is actually the reason? The reason is because trading isn't only about reading the chart. It's about how we can how we make decisions when we are afraid, excited, frustrated, and worried about missing and trading opportunity. Today, we are going to look at some of the most common emotional challenges the trader face, which is fear, greed, FOMO, and revenge trading. We will keep everything simple, practical, and we will use real trading situations so you can recognize these behaviors when they actually happens in the market. And guys, in the middle of this webinar, I'm going to reveal an secret code to you, a 120% deposit bonus code. So guys, still with stay with me till the end so that you can claim the deposit code bonus so that you can maximize your trading profit. So a little more I want to tell you about the promo code we are going to reveal today. A lot of people are afraid to use deposit bonus codes. 120% IQ option offers 120% to 150% promo codes, a deposit bonus promo codes. But a lot of people are afraid because of the turnover. IQ option gives this 40x or 50x based on the promo code. These turnovers actually they put this turnover is the best is to help the trader to be consistent in trading. Suppose IQ option will give you 120% promo code for just 1x turnover. A emotional trader will execute them with big amount. Like if you deposit $100 and you will get a 100 deposit dollar, 120% deposit code, he use it and you will get $220 in their account, which will obviously give the trader to get an extra margin in their account. But because of the 40x turnover, a trader automatically got the patience to use small amount trading, small amount trade amount, so that he can reach the 40x trade amount, 40x turnover amount. And there is a good opportunity, there is a good system the IQ option gives, that if the trader complete if the trader complete and reach the turnover, they can take the full bonus amount also. So guys, don't afraid, it's for your good, it's not for your bad. IQ option put this 40x turnover for your good, not for your bad. So guys, always use promo code deposit bonus promo code when you deposit in the IQ option. So guys, without wasting any time, let's get started to our today's topic. know why knowing the rules isn't enough in trading. Let me start with the simple questions. If you already know the trading rules, why can you still make a bad decision? You might know that you should wait for confirmation. You might know where your stop loss should be. You might even have the complete trading plan. But when real money is involved, the decision can feel very different. And you may see the market moving quickly and suddenly feel that you need to enter now, or you may have a losing trade or feel the urge to immediately make that money back. The rules haven't changed, but your decision making can change. That's why trading psychology is always matter to control your mind while you are in trading. Today we are not going to focus on finding another strategy, we are going to focus on something more personal. How do we make better trading decisions when our emotions are telling us to do something different? And we are going to take it step by step. Okay, guys? So let's move to the next topic, which is what is a trading psychology? So, what exactly do we mean by trading psychology? Trading psychology simply mean trading psychology simply is about how our thoughts, our emotions can influence the decisions we make while we are in trading. I am repeating this one. Trading psychology is about how our thoughts and emotions can influence the decision we make while trading. Think about same trader. I want to give you an example. Think about the same trading setup. Two traders, two traders look at the same chart, understand the same strategy and still make the completely different decisions. One trader may patiently wait for confirmations, another may enter too early because they don't want to miss the move. The chart is the same, the strategy is also the same, but the decision was just different. That's why understanding our own behavior is so much important. We don't have to eliminate every emotions. That's not realistic. We can't hold our emotions. But the goal is to recognize when an emotion is influencing our decision and return to our trading plan. Okay? And now let's start with one of the strongest emotions a trader can experience, which is fear. So, guys, what is actually fear? How a trader fear while in trading? Fear can happen two times. I have faced in my whole trading career. A lot of people also fear of deposit. A lot of people has the fear of deposit. They have the money, they have the knowledge, they have the whole trading plan, but they are afraid to deposit because they are afraid to lose. So this is another things of fear, another scenarios of fear. But today we are going to talk about fear while we are in trading. After we execute a trade, how fear actually uh, comes to us, how fear actually happens. Imagine you enter a trade according to your trading plan. Your entry is valid, your stop loss is already planned, your take profit is also planned, but then the market moves a little against you. Suddenly, you become uncomfortable. You start thinking, maybe I'm wrong. Maybe I should close the trade now. So you exit too early. You close your trade manually. And a few minutes later, the market turns around and moves in its original direction, the direction you already predict for. So you just lost the trade, lost the opportunity, but also it's destroy your emotions. It will affect the next time you trade. There's a problem with the fear. It can make us abandon a valid plan before the market has actually invalidated. We invalidate before the market invalidate the plan. We manually close the trade. So this is very bad. This is very bad for a trader. I also talk about this one in our previous webinar that we should not manually close our trade. Okay. it will only destroy our emotions. For the long term trading career, it will not gonna help. It will also have a bad impact on your trading career. Okay, so guys, that's a and but there is a important distinction. Okay, but there is an important thing we have to know. Leaving a trade because you predefined setup has changed is different from leaving simply because you were afraid. What I mean by that, suppose the market is moving in the upward direction, okay, suppose it's an uptrend, you place your trade here. Okay, this is a stop loss. I'm going to show you two scenarios here. This is your entry, this is your stop loss, and suppose this is your target. You are taking 1:2 risk to reward ratio, and suddenly after you enter, suddenly two or three candles go against you. You immediately got in fear and close this trade manually. You close the trade manually. So this is not a perfect trading example, this is not a sign of a good trader. But there is two scenarios wherein we can actually close our trade manually. The scenarios are when we are in profit. Suppose you execute a buy trade here and your position is locking here, your position is running here. Right now the market is here, and suddenly you saw there is a market structural change. What does I mean by market structural change? There are two things happens also in this. One is market structural change, the another is your setup is invalidated, your strategy is reversed. Somehow, what I mean by strategy is reversed, you have a strategy which says you have to buy here, and you find another strategy, the same strategy also says you to sell from exactly here. So this is invalidated, the setups is contradicting each other. So that's the issue, when we should manually close our trade by taking a little profits. As I told you, always something is better than nothing. And the second scenario is after you enter a trade, you are in the market is going in the upward direction, you put a buy trade, everything is good, going good, but suddenly you thought that you didn't watch the market news, and after you saw the market news, you saw that in the future, in about 5 to 10 minutes, a huge market news, a huge US news or huge big news will come that will affect the pair you trade in. So in those two scenarios, you can manually close your trade. Otherwise, you have to stick to your plan. This is strict. Okay, this is a strict plan. Always strict to your plan. So, guys, don't try to eliminate fear. Instead, ask yourself: has my trading idea actually changed, or am I just uncomfortable? That questions can help you to make more disciplined decision. Okay. So guys, let's move to our next topic. Great. Why traders stay too long after they execute their trade? Now let's look at another common problem, guys. Imagine you enter a buy trade. The market starts moving in your direction. Your take profit is already planned, but when you see the price going higher and higher and higher, you saw a very good strong momentum, volatility is on your favor, you start thinking maybe I can make more money. So you decided not to take your planned profit. The market turns around, and suddenly the market turns around, your profit becomes smaller, and sometimes a winning trade can become a losing trade. This how greed can affect a trader. The problem is not wanting to make a profit, the problem is changing your plan, changing your trading plan just because you want more money. You just change your trading plan, you just move your stop loss, you just move your take profit a little longer, a little higher or a little lower, just because you want more money. You didn't stick to your plan, what you exactly planned for your take profit. So before you change your take profit, ask yourself: am I following my profit? Am I following my trading plan, or do I just want more profit in this trade, in this specific trading situations. So that's the question, can help you to stay disciplined, guys. And I want to give you an example on this, how a trader feel in these kinds of situations. Suppose the market move in the upward direction like this, higher highs and higher lows, making higher highs and higher lows, market going in the upward direction, and you get your entry here. You get your entry here, and you set your SL here, you set your take profit near 1:2, 1:1 ratio, as per your risk per reward ratio, and the market is moving in your favorable direction. You put a buy entry here, and market is moving in the upward direction like this, and you saw a very good market momentum. You saw market is moving in the upward direction drastically. So you think that I should move my take profit a little longer. So you move your take profit from here to here for the sake of taking more money, for the sake of taking more profit in this trade. So this is how greed works in trading. Okay, this is how greed works. And most of the time market after hit your take profit, because you planned for this take profit. You already plan before you execute. As I told you, we must, a trader must plan their SL, their entry, SL and take profit before they execute their trade. Okay, so you all the things already pre-planned. You planned all the things before, but after you see the market moving in your favorable direction so quickly, then you decided to move your take profit a little longer by the sake of taking more profit. So this is bad. Most of the time after the market hit your take profit, the market will return against you, and this is bad for you. Okay, most of the time these winning trades also hit your SL. Okay, winning trades can turn into a losing trades, guys. Be careful on this. Don't repeat these kinds of mistake again. Okay, don't be greedy in trading. Just stick to your plan, what you already planned for before you execute your trade. So let's move for the next topic. If you understand what actually greed happens while we trade. FOMO, very famous word. FOMO means the fear of missing out. Now let's talk about. So sometimes there is a possibility that after you enter your trade, the market pulls back, and the winning trade, this is not your trade, a normal setup. You execute this trade because you saw the market is moving too fast in the upward direction or downward direction. By watching the volatility, by watching the market fast move, you execute the trade because you don't want to miss the move. This is bad. This is not a trading setup. This is a completely gambling, in my opinion. Okay, remember guys, we what we learned in all the topics till now in our webinars: wait for the setup, wait for the confirmation, then make our decisions. Okay, you don't have to catch every move in the market. There will always be another opportunity. The market is full of opportunities. The market will give you opportunity. Just wait for the market to give you opportunity. Don't have to hurry. Okay guys, so do not chase the market because of FOMO. Let's move for the next topic. Revenge trading, one of the most common and very harsh reality a trader face, a very emotional impact a trader face, which is revenge trading. Which is, let's talk about this one. What is actually revenge trading? Imagine you take a trade and you lose it. You become frustrated. Then you started thinking, I need to get my money back. So you open another trade immediately, but this time you are not entering because you found a good setup. You are entering because you want to win back your loss. You want to recover your previous loss. Recovering the sake of recovering previous loss, if you enter a trade, if you execute a trade just because and you want to fight for your you want to fight for to return your previous loss to the market, you can't win. This will eventually just leads to wiping out your account. Okay guys, just do not do this, never and ever. And let's talk in the flow. You are entering because you want to win back your loss. After you face a loss, you immediately enter a trade just because you immediately enter another trade, but this time you did not follow your trading plan. You enter your trade just because you want to recover your previous loss. And if that trade has loss also, you may take another one, and this cycle going again and again and again. Remember, one losing trade does not mean you need to trade for another one immediately. Losses are common in trading. Sometimes the best thing is to do after a loss is simply to stop and review what happened. Ask yourself, did I follow my plan? If you did follow your plan, accept the result and move on. And if you didn't follow the plan, just learn from the mistakes and don't do it again. Don't trade just to get your money back. This is the most dangerous thing in trading. Okay, guys? Only trade, only execute your trade after you got all your confirmations, all your setup is mitigated. I hope you get it, guys. Let's move to the next topic, which is over trading. When more trades become the problem. Now, let's talk about over trading. Overtrading means taking too many trades without a good reason. Imagine you take one trade, then another trade, then another trade. You keep looking at the chart and thinking maybe there is another trade, there is an opportunity I need to trade again, and you just keep doing it again and again and again. But not every market move is a good setup, guys. Not every market will give you good setup. Sometimes you are trading simply because you are bored, or because you want to make more money, or because you feel like you don't need you need to do something. So the problem is more trades do not automatically mean more profit. More trades can also mean more risk, more mistakes, more emotional decisions. So ask yourself, guys, before every trade, ask yourself, do I have a real good setup right now? Or am I just looking for another trade just because I want to trade? If there is no good setup, it's okay to wait. Doing nothing is also a trading decision. Patience is also a part of trading. I'm going to repeat this one again. More trade do not mean better trading. Take a trade only when there is a good reason. Okay, now let's move to the next topic, the emotional trading cycle. Till now we talk about greed, fear, FOMO, revenge trading, over trading, but sometimes these problems don't happen just alone. They can create a cycle. They can all come into your mind and just destroy your trading setups. How they actually did it? Let's look at the simple example here on the screen. You see the market moving so fast. The market is moving so fast, and by the sake of FOMO, by the sake of fear out, the market is moving without you. You execute your trade here, suppose, and after you execute your trade, the market go against you. fear makes you panic, and that's when fear comes. After the market go against you, the fear comes, and fear makes you panic. You close the trade. Immediately you close this trade manually. You manually close this trade just because you fear. The first mistake you do to trade on FOMO, the second mistake is you close the trade manually. Now you're frustrated, you want to get your money back, so you took another trade, and that's called revenge trading. Then you took more trades without good setups, that is also called over trading. And now the cycle is continuous until and reach the account balance is become zero, you wiping out your account. The important thing is to stop the cycle early. You lost one trade, you make only one mistakes, you execute the trade just because you feel FOMO. Okay, finish it. You lost the trade, you make one mistakes, learn from the mistake and stop and wait for the market to come and give you opportunity, and then execute your trade, and after you get all the confirmations and your setups. And one thing guys, the important thing is to stop the cycle early. As I told you, before taking the next step, stop and ask yourself, am I following my plan, or am I reacting to the market just because what just happened to me? I'm just lost right now. That's why you execute a trade again and again and again. Okay guys, now let's answer some questions from the chat. Before we move to the next topic, let's answer some questions from the chat. What should I do when I feel the urge to enter a trade even though there is no valid setup? The answer is just a wait. There is no clear solution of waiting. You can enter you trade. You can enter you trade whenever you want. The buy sell option is on your hand. You have the all authority to uh, trade, execute your trade. But the smart trader never execute their trade just because of FOMO, fear, and the urge of trading. We have to wait for the setup. If you don't have good setup, if you don't have valid setup, just wait. Just change the pair. You can change the pair and wait for good setup, and then you can execute your trade. And also, as we already discussed about, we have to be planned for our setup, planned for our executions, planned for our stop loss, planned for our take profit. If all the things is mitigated, then you can execute your trade. I hope you get your answer, Jessa. So let's move to the next topic. Trading with a plan versus trading with emotions. Now let's compare two traders. Both traders see the same chart, both have the same trading setups, but they make different decisions. Trader 1 has a plan, but entering, they know the entry, uh, stop loss, take profit, and the risk. So when the market moves, they follow the plan. But trader 2 has no clear plan. When the market moves, they start guessing. They may enter too early, or they may move their stop loss. They may take the profit too early, or they may take another trade after a loss. So trader 2 make all the mistakes we talk about, and trader 1 has discipline, wait for the market to come there, trading setups, and give the opportunity. If the market gives you opportunity and you get your confirmations all along, then you can execute your trade, as you already discussed about it. The big difference is not the chart guys, the big difference is the plan. A plan cannot guarantee a winning trade, but it can help you to make decisions before emotions become too strong. And so before you enter, know what you are doing to do. First at first, and second, plan first and trade second. As I told you, we have to be pre-planned. We have to be pre-planned for our execution. We have a strategy, but we have to be planned based on the strategy, where should be our stop loss will be set, where should be our take profit would be set, and where is we executing right now. Is it in the favor of trend, or we are trading against the trend? So all the things should be mitigated before we execute our trade. Plan first, trade second. So let's move to the next topic. What happens after a losing trade? Now let's talk about something every trader will face: a losing trade. Even with a good plan, sometimes some trades will lose. So, what should you do after a loss? First of all, don't rush into another trade. Take a moment, take a deep breath, look back at the trade and ask, did I follow my plan? If you followed your plan and the trade still is a loss, and that's a part of trading, you have to accept the loss. You don't need to be angry with yourself. But if you did not follow your plan, ask yourself, what mistakes did I make? Learn from the mistakes and do not repeat it. The important thing is not to turn one losing trade into five emotional trades. One losing is one loss. One loss is one loss. Don't let it control your next decision. I hope you get it, guys. And I have questions on this matter. Suppose you just lose a trade. What should you do first? You will take another trade immediately, or review why you lost it, or try to win back the money. What will you do if you face in these kinds of situations? Write this on the chat. Write your answer. So let's move to our next topic, which is what happens after a winning trade. Now we already talked about what happens after a losing trade, but what about after a winning trade? A win can also affect our decisions. Imagine you make a very good profit and you feel very confident. Then you start thinking, I'm doing good, I'm really good, doing good today. And so you take another trade without a good setup. A lot of people have the mistakes after they winning a lot of trades again and again and again. Okay, you think that okay, today is a very good day, a great day for me, I'm in a luck. So they execute the trade, and this is also called overtrading. In my opinion, this is also called overtrading because it did not stop after you get your target. After you hit your target, it did not stop. You will continue the trade, you will continue trading because you feel very much confident. Okay, this will also leads your good day in a bad day. So this also can turn a good trade into series of bad decisions. And so after a winning trade, don't get too excited. Take a moment and ask yourself, did I follow my plan? If yes, that's great. But your next trade still needs its own setup. A winning trade does not make the next trade is a good trade. Every new trade needs a new reason. I hope you get it, because if you are also a new trader, you know not every execution is the same. Every trade has different scenarios, every trade has different words to do, different things to tell, different scenarios, different market conditions. And stay consistent, guys. Follow your plan, let your plan guide your next trade. So let's move to the next topic. Our next topic is about how to stay calm during an open trade. Just let's understand what I'm just talking to you. Suppose you may see the price is move up, then down, and then go in the up direction again. And every candle can make you want to change your decisions. After you execute a trade, you execute a buy trade, and you saw the market is moving down, up, and again down, again up. It's consolidated. It starts to consolidating after you execute, after your execution. So you may thinking, why this happening? After I execute the trade, why the market is not moving up? Why the market is not moving in my favorable direction? why it's consolidating here. So what can you do? First, remember the plan you made before entering. You already know your entry, you already know your stop loss, you already know your take profit, and you already know your risk. So you don't need to make a new decisions every time the price moves a little. Take a deep breath, look at your plan, then ask, has anything important changed? If the answer is no, don't let every small move control you. You don't need to watch every candle. Stay calm, follow your plan, and guys, just repeat it. So let's move for the next topic: emotional decision versus planned. Now, let's look one simple example here. Imagine we have the same trading setups. We enter after our confirmations. We have our stop loss. We have our take profit. Now the price starts moving against us. A trader one gets scared. They close the trade too early because two or three candle go against their trade. They close the trade manually. And what trader two do it? The trader two check the plan. Stop the stop loss has not been reached yet. He saw that it, the scenario also comes to the trader two also. Let execute this one. The market is moving up. This is a trader A. Trader A. This is a trader B. Okay. Trader A close their trade. Trader A execute the trade for buy direction. This is their SL. After two or three candle go against trader A, he closed this trade manually. And what trader B did, and the market is moving in the upward direction, he execute the trade here, put his SL here, put his TP here, and the scenario also happened to trader B also. The market go against him, two or three candle go against him, and trader B thinks and watch all the plan. He analyze his plan again, that he said his SL wrong or right. He saw all the things. He reviewed his plan again, and he saw that all the things is correct. And trader B stay calm. He stays calm, and eventually, after getting some retest, market move its original direction, and trader B got the take profit. So that's how we should enter. That's how we should be feel. That's how we should do after executing a trade. After the market is two or three candles go against us, we don't need to be fear after two or three candles go against us. So now I'm not saying trader two will also always make money. That's not the point. The point is the trader two is making the decisions based on the plan, not just the emotions of the moment. That's what we want to practice. Don't ask only how do I feel, ask what does my plan say. And before I move to the next topic, I want to share with you guys the today's 120% promo code. Are you guys ready? One, two, and three. I hope you can see the promotional code on your screen right now. As I already discussed about it, what are the benefits of a promo code? Just use the promo code right now. Only 50 positions are available. So first come, first serve. So let's focus on our today's topic. Now, guys, it's your turn. This is the chart. I'm going to show you a simple trade execution here right now on this here. Suppose I want to look, I want you guys to look here. here, this is my entry, right? And the market is also moving in the upward direction like this. So I want you to look at the chart carefully. We have our entry here. This is an entry. This is the entry. And here is our stop loss. This is a stop loss. And the trade is open now. Assume that the trade is now open. But the price starts moving against us. Suppose the market is moving against us right now. Suppose the market is here. I want you to think about your decisions. Don't look at the result right now, but I want you to think about your decisions. If the market is here right now, the market is here, what will you do if you face this problem, if you face this issue right now, if you face the situation, what will you do? Write this on the chart. Are you close the trade, or you will wait, or you will recheck your plan, or you will stay calm and just let the market do, because you already pre-planned all the things before you executed it. After you executed it, you just have to wait and watch the market, what the market should do. Okay. And what will you do? Just write this on the chart, guys. What will you do after you face this? You enter here, and sudden the market go against you, but did not hit your stop loss yet. The market is here. What will you do? Write this on the chart. So would you close the trade because you are scared? Would you close the trade because you were scared? Or would you first check your plan? Is the plan you already planned, what you just planned, is it still valid? Look at the chart, think for a few seconds, and then tell me what you would do. The options are close the trade. The option B is check the plan first. Obviously, we know we have to choose the option B. Check the plan first. We have to check our plan. This is what we should do. This is not. We should check the plan. If the plan was correct, then wait for the market movement. If the market is moved, most of the time, if your setup was valid, the market most of the time go in its original favorable direction, your trade predictable directions. So guys, there is no need to answer quickly, there is no need to decision quickly, even after even the market go against you. Just wait for the market to hit either stop loss or take profit. Just wait, let the market decide, because you already planned before you execute the trade. So let's move to the next topic. Okay, now let's analyze these decisions here. Okay, 1 minute. One second, guys. Okay, now let's look at the answer together here. We execute our trade here, right? After getting confirmation, after getting our confirmation here, as we know that what is a confirmation? A confirmation can be a three candle momentum. A confirmation can be a very good a strong bullish candle or bearish candle. And after getting confirmation, we can execute our trade here, or we can after watching several moves, several highs and lows, we can execute our trade also here. So after execute our trade, the market is moving a little against us here. So what will you do? You will close the trade here, or you will wait? What will you do? The first thing we should do, not to panic. We should ask ourselves, is my setup is still valid? If the answer is yes, there may be no reason to close the trade just because we feel scared. Remember, the market will not move in one straight line. Small moves against our trade can happen. But if the market reaches our stop loss or our trading idea changes, our trading plan become invalid, we can need to follow our exit plan. Okay, that's we already discussed about. So the important lesson here is, don't let one candle make your decisions. Look at the full plan, then make your decisions. I hope you get it, guys. Let's move for the next topic. Now let's make this practical, guys. Before you enter a trade, don't only check the chart, check yourself, your plan too. Ask yourself these 5 questions. The number one is, do I have a good setup? Do I have a good setup? If the answer is yes, tick this mark. And the number two is, am I entering because of my plan or because of I'm afraid of missing the move, missing the direction, missing the speed of the market? If the answer is my plan, then also make it a tick mark. And the number three is, do I know my stop loss and my risk? If the answer is you have a stop loss, your risk is ready, then also tick mark this one. And the fourth is, do I have my take profit? Do you have your profit target? If the answer is yes, you also tick mark this one. And the fifth is, am I claim enough to make these decisions? If the answer is also yes, you can also tick mark this one. If all the things is mitigated, then you can execute your trade. This will call a high probability trading setups. And we also talk about how we can find high probability trading setups in our next webinar, which will be held in 4th of September, guys. So set your reminder. Remember, not taking a trade is also a decisions. The goal is not to trade all the time. The goal is not to trade trades all the time. The goal is to make better trading decisions. Make this trading if your full-time career. You don't come to this trading for loss, right? You are not here to lose. You are here to earn money. You are here to be independent trader, independent earner. So always follow the checklist, always follow the rule, always follow your plan so that you will stay in the market for the long run. This is our next slide. We are going to discuss about some rules. We know don't need to break these rules. Just remember these rules when you are in trading. Okay. Let's bring everything together, guys. I want you to remember these 5 rules always. Very simple rules. Rule number one is, don't chase the market if your setup is not ready. Wait. Waiting is also a part of trading. Rule number two, don't trade because of fear. If the market move against you, check your plan before you panic. And the rule number three is, don't trade because you want to win back or you are after a loss, stop and review. Don't start to fight with the market. Let the market decide, let the market comes to you, give you the opportunity, then you can execute. And the rule number four is, don't let one win change your plan. Stay calm and wait for the next good setup. Do not just execute your trade just because you feel you were lucky today. Okay. And finally, rule number 5, don't trade without a clear plan. Know your entry, know your stop loss, set your take profit, risk before you enter. These rules are very simple, but simple does not always mean easy. The goal is to practice them until they become part of your trading routine. Okay, guys, let's move to the next topic. Where comes to the near of ending this webinar, guys. Before we take this kinds of, suppose, cause here from here to here The market is moving down, making higher highs and higher lows. I mapped all the things here. Now let's draw a resistance zone here. This zone seems promising. Okay. I draw this resistance zone based on this move. Based on this move, I draw this resistance zone, right? After I draw this resistance zone, the market is move and exactly close, and it gives a good bearish engulfing pattern. We can execute our trade here because there is also a good rejection. If we focus, the red candles also have some rejections. We can execute our trade here. Okay, but as we can see, the market is somehow go against us. Market is somehow go against us. And if you know, if you already watched our market structure class, you know what is happening here. We trade here. This is our latest lower high, and the latest lower high is also broken, but the market is failed to make new higher high. Instead of making new higher high, market is moving down, making lower lows. So always set your stop loss in previous swing highs, swing lower highs. Okay, so if you set your stop loss here, take profit is near here 1 is to 2 or 1 is to 1. Eventually the market is exactly hit your take profit. Okay, this one is what? Take profit. Take profit. Here is your entry. Okay, stop loss, take profit, your entry, and in the middle market go against you, but your stop loss didn't hit. You wait for the market movement. Eventually the market hit your take profit. That's how a smart trader should do. A smart trader should always wait for the right opportunity before executing any trade. Okay guys, a lot of people close their trade here because they thought their entry is also, the market is also moving against their entry in the previous direction, in the upward direction. There is a possibility the, because the trend is also changed, the word of trend is also changed, the lower high is also broken. This is the latest lower high, and the latest lower high is also broken by the buyers. So an experienced trader also think that now there is a possibility the market can move in the upward direction. But if you are right, if your setup was right, you may still come and watch the market, watch your plan, and wait for the market to move, wait for the market to react. And what we saw here, eventually the market move in your original trend direction, original favorable predicted direction, and you will get your take profit. So that's why I told you guys, wait. If the market go against you, you don't need to be panic, just wait. Waiting is also the part of trading. Now I think we are at the end of today's session, guys. Yes, we are at the end of today's session. So That's the end of today's webinar, guys. Today we talk about something every trader needs to understand. Your emotions can change your decisions. We talk about fear, and then we talk about FOMO, we talk about greed, we talk about revenge trading, and then we talk about over trading also. But we also learned something simple was to deal with them. Have a plan, don't chase the market, don't trade, don't just trade just to win back a loss. Stay calm and win. And most importantly, follow your plan. You cannot control what the market will do. You only can control how you respond after you enter. So guys, again, thank you so much for joining me today. If you have any questions regarding today's webinar, you can ask on the chat. Please put them in the chat and I will be happy to discuss with you. And thank you everyone. I will see you in the next webinar. Audience guys, please give us a like, subscribe, and share this webinar and IQ Option Trading Academy, IQ Option Education.